Let me ask you something. If I handed you $10,000 right now, cash in your hand, and said you had two choices, would you walk into a bank and buy gold? Or would you walk into a Rolex boutique? Most people, the average person, they'd say gold. Because gold is real. Gold is safe. Gold has been valuable for thousands of years. Gold is what your grandfather told you to trust. But here's the thing nobody tells you. That same $10,000 in gold, in 5 years, it might be worth $11,000. Maybe $12,000 if you're lucky. That same $10,000 Rolex Submariner, in 5 years, it might be worth $14,000, $16,000, sometimes more, if you bought the right one. And we're not even talking about the rare stuff. A Paul Newman Daytona sold at auction in 2017 for $17.8 million. No gold bar in history has ever done that. So today, I'm going to break down something that Wall Street doesn't talk about, that your financial advisor doesn't mention, and that most people completely overlook. Why a Rolex, a piece of mechanical jewelry that sits on your wrist, has quietly become one of the most powerful stores of value on the planet. We're going to talk about the psychology behind it, the economics behind it, the history behind it, and what it actually means for your money in 2024 and beyond. Before we talk about Rolex, we need to understand what we're comparing it to. Because gold isn't just a metal, it's an idea. Gold has been humanity's go-to store of value for over 5,000 years. The ancient Egyptians used it. The Roman Empire built its economy around it. The United States literally tied its entire dollar to it until 1971, when Nixon took us off the gold standard. And gold is good. Don't get me wrong. Gold has real properties that make it worth storing value in. It doesn't rust. It doesn't corrode. You can melt it, reshape it, and it's still gold. It's scarce. There's only so much of it in the earth. And it's universally recognized everywhere on the planet. But here's gold's dirty little secret. Gold is passive. When you buy gold, you buy something that just sits there. It doesn't do anything. It doesn't generate income. It doesn't appreciate based on demand from a passionate, growing community. It doesn't have a brand. It doesn't have a story. It doesn't have cultural cachet. Gold's value goes up when people are scared, when inflation spikes, when markets crash, when the world feels unstable. It's a fear asset. It's the asset you run to when everything else is falling apart. And that's valuable. But it's also kind of boring. More importantly, and this is the part that most people miss, gold doesn't have a ceiling on desire. Nobody wakes up at 3 in the morning dreaming about a gold bar. Nobody posts their gold bar on Instagram. No one walks into a room and has other people's eyes go directly to their gold bar on the table. But a Rolex? That's a different story entirely. A Rolex creates desire. It creates status. It creates community. And in the modern economy, in the attention economy, desire is the most valuable currency of all. To understand why Rolex holds value the way it does, you have to go back to 1905. A 24-year-old German immigrant named Hans Wilsdorf moves to London with almost nothing, just ambition and a crazy idea. At that point in history, watches were pocket watches. Big, bulky, and designed to sit in your vest. Nobody wore watches on their wrist. That was considered feminine, impractical, almost ridiculous. Wilsdorf thought that was wrong. He believed a wristwatch could be precise, durable, and desirable all at once. And he set out to prove it. In 1910, Rolex became the first wristwatch to receive the Swiss Certificate of Chronometric Precision. Basically, the official stamp that said, "This watch is as accurate as a pocket watch." Nobody had done that before. In 1926, they released the Oyster, the world's first waterproof wristwatch. To prove it worked, they strapped it to the wrist of a British swimmer named Mercedes Gleitz, who swam the English Channel. She wore it the entire way. When she came out of the water, 10 hours later, the watch was still ticking perfectly. Rolex didn't just make a press release. They put the story on the front page of the Daily Mail. That's marketing genius. That's not just selling a watch. That's creating a mythology. And that mythology kept growing. Edmund Hillary wore a Rolex when he summited Mount Everest in 1953. James Cameron wore one when he dove to the deepest point in the ocean. NASA used Rolex watches. Presidents wore them. Kings wore them. Steve McQueen, Paul Newman, Marlon Brando, the coolest men in Hollywood wore them. Every single one of those associations was intentional. Rolex wasn't chasing cool. Rolex was defining cool. And the brand protection they've built around that reputation? It's impenetrable. Rolex doesn't do celebrity endorsement deals the same way other brands do. They don't plaster their logo everywhere. They don't have massive sale events. They don't flood the market. They guard the green crown like it's the actual crown jewels. Because they know something that most brands have forgotten. Scarcity plus desire equals power. Now, here's where it gets really interesting. Because Rolex isn't just a luxury brand, it's an economic anomaly. Most products depreciate the moment you buy them. Cars lose 20% of their value the second you drive them off the lot. iPhones are worth half what you paid by next year. Even most luxury goods, Louis Vuitton bags, designer sneakers, their resale value is inconsistent at best. But Rolex? Rolex appreciates. And not a little bit. According to data from the Bob's Watches Price Index and multiple luxury market research firms, the average Rolex watch appreciated roughly 100% in value between 2017 and 2022. Some models went up 300%, 400%, even more. The Rolex Submariner, the most iconic sports watch on Earth, retails at Rolex-authorized dealers for around $9,100. On the secondary market, you're paying $13,000 to $15,000 for the same watch, from the same brand. That's a 50% premium just to actually get your hands on one. The GMT Master 2, Pepsi, with its iconic red and blue bezel, retails for about $10,700. Secondary market value, regularly $22,000 to $25,000. Why does this happen? 3 reasons. Reason number 1, controlled supply. Rolex is a private company. They don't have shareholders demanding maximum production for maximum profit. They produce exactly as many watches as they decide to, not one more. Industry estimates put annual Rolex production somewhere between 800,000 and 1 million watches per year. For a brand with global demand from billionaires, celebrities, collectors, and first-time buyers across 190 countries, that's nothing. The waiting lists at authorized dealers are real. In many cities, you can walk into an official Rolex boutique today and be told the Submariner you want will take 18 months. 2 years. Sometimes they'll say they don't even have a waiting list. They just don't have the watch. Reason number 2, relentless demand. While supply stays flat, demand keeps growing. The global wealth class is expanding. More millionaires are created every year, especially in Asia, in the Middle East, in emerging markets. And what do newly wealthy people want to signal their success? A Rolex is one of the first answers. Universally recognized, immediately understood. Meanwhile, existing collectors are buying more. The watch community, watch guys, has exploded in the last decade. YouTube watch channels, Instagram watch accounts, Watch Ease, Watchbox, Chrono24. There's an entire ecosystem now of enthusiasts who track Rolex prices the way stock traders track equities. Reason number 3, the gray market. Unlike gold, which trades on open commodity exchanges, Rolex has a thriving secondary market, the gray market, where prices are set purely by supply and demand dynamics. Companies like Bob's Watches, Watchbox, and Chrono24 are essentially stock exchanges for Rolexes. And when you look at the price charts for popular references, they look less like watch prices and more like growth stock charts. This isn't speculation. This is a documented, real, measurable phenomenon. In 2021 and 2022, during peak demand, some Rolex models were appreciating faster than Bitcoin, faster than Tesla stock, faster than almost any conventional investment class. Now, has the market corrected since the peak? Yes, partially. In 2022 and 2023, as interest rates rose and the economy tightened, gray market Rolex prices came down from their highs. That's real, and you need to know it. But here's the key insight. Even after that correction, most popular Rolex references are still trading significantly above their authorized dealer retail prices. The correction brought them from extreme peaks back to strong highs. Gold doesn't do that. Gold corrects and sits flat. Rolex corrects and still beats your savings account. Let's put these two side by side, because I want you to really see what we're talking about. Gold has been a store of value for 5,000 years. It's globally recognized. It's liquid. You can sell it anywhere in the world instantly. It's inflation resistant. When the stock market crashes, gold typically goes up. It requires no expertise to own. There's no risk of fakes destroying your portfolio. Well, very low risk. And it's completely passive. No maintenance required.